Last week, US and European share markets saw their biggest fall in 14 months. The S&P 500 in the US was down 6.4%, while European share markets were down over 9%. This came as financial markets really hammered government bond yields for some of Europe's most indebted countries. This has seen European finance ministers call an emergency meeting over the weekend in order to try and stem the tide, but also provide some stability to the euro currency, which saw a big tumble last week. This all came despite the US economy registering its strongest employment month for over 4 years. Last month alone, over 290,000 jobs were created in the US economy. The New Zealand dollar starts the week trading at 71.60 against the US. With markets all over the show last week, the New Zealand dollar traded between 70 and 73 cents, a pretty wide range of over 3 cents for the week. US beef prices continue to look very strong. We aren't predicting that prices will fall out of bed anytime soon, but there are a few risk factors emerging that people should watch out for. The first is that a full-blown debt crisis in Europe could mean that global trade would stall just as it did during the global financial crisis. The other is that the US dollar has been very weak recently. A debt crisis in Europe would likely see investors run back to the US dollar, and this would decrease the competitive advantage US exporters have been enjoying in beef markets globally. This could see them concentrate on their home market a little bit more as opposed to export markets. Chicken production in the US is also increasing, and so lower chicken prices could put some pressure on beef prices down the track. These are a few factors to watch for New Zealand beef producers. However, local schedule prices have been increasing, and we are predicting them to continue doing this during the next few months.